So houses versus apartments in 2026, who is the clear winner? People can't afford to buy the $1.5 million house. They're going to buy the $800,000 unit in the same location.
Yeah. I would rather live in a one-bedroom unit on the eastern side of Stewart Avenue. For anyone in Newcastle, they know what I'm talking about, instead of going and living out in Cameron Park.
I'm seeing as a trend, people are really taking more value in their location and their quality of life
100%.
as opposed to having land or a backyard they don't use.
Stupid saying of land appreciates and fucking buildings depreciate, or whatever that that saying is. They lack the fundamental understanding of what's actually behind it. Units are still a great investment if you buy the right asset. It's like a cultural shift.
Yeah.
You see New York, Tokyo, Paris, all of these advanced cities, they're all units there.
Yeah.
Yeah, so a lot of people just think that houses outperform units or that houses are a better investment, but there's a lot more to it, and it's not just as simple as houses outperform units.
Yeah, you can't just pick an asset type like that and say that's better than that.
And that's the thing. People don't have that difference.
I know the word you're saying.
Yeah, whatever. Because units are still an asset class.
Yeah.
Like we're just talking properties here, so the fundamentals still apply.
So I have it all the time. And literally I think there's thousands of podcasts and people that will literally say, nah, you need the land, you need to have that. But I've always argued, and I'm going to use Newcastle as an example, I'd prefer own a unit in Bar Beach or Merriweather versus land in Curry.
I mean,
you know what I mean?
Curry's been a pretty strong performer, but
probably a shit idea then, but you get what I'm saying.
The whole thing is that stupid saying of land appreciates and fucking buildings depreciate, or whatever that that saying is. They lack the fundamental understanding of what's actually behind it, which is what we're going to go into now.
So in the news, we have seen quite recently that units and townhouses have been performing extremely well.
Yeah.
But what we're going to go through today is what, the data is behind that.
Yeah.
And what sort of safety measures you can do, I guess, to make sure you're not buying a unit or a townhouse or whatever it is that is going to perform badly. And there's some pretty easy things that you can do to avoid that, 100%. Which we'll discuss.
So the first thing for everyone to understand is that the market is changing. We're seeing a very different landscape coming into, as the real estate industry progresses, but I think even more so since the COVID-19 pandemic and this whole acceleration of inflation or the debasement of our currency. So people need to understand that the market is changing. And there's many layers to that. Remote work and all of these things change the whole landscape for property.
And we're in a affordability crisis, if you want to call it that. I hate the word crisis, but people can't afford what they could 5 years ago during COVID. So people start to then have that choice. Do you buy the block of land at Windsor? We'll use Sydney now as an example, or do you buy the unit closer to town?
Yeah.
What are you going to weigh up more? Do you need that backyard that you're using, with the commute? You're probably not going to use it much anyway. Yeah. Or do you just get something like closer to work in a unit?
Yeah.
So that has changed a lot. People can't afford the house in the city, so they're going to buy a lower class, well, if you want to call it that as well. So it is. There's a lot more to it than just going.
Yeah, and think talking about Newcastle locally. We know that nobody wanted to live at Newcastle in the 70s or 80s because it wasn't near employment.
Yeah.
So Merriweather had this massive acceleration because of changes, which was primarily probably cars and that, shorter commute time to work and workplaces expanding. And then when you're looking at it on a major city level like Sydney, you've got remote work, people being able to, do hybrid work or work from home. Or even the public transport network. There's been a lot of infrastructure spend in the public transport network. So the North Connects and West Connects tunnels has connected Western Sydney more so to the city. So that's accelerated the growth out there because there's been a lot more people who have that amenity in that Western Sydney corridor to still work in the city if they need be because it's in commuting distance.
So 10-year growth data that we looked at earlier before the podcast, there is multiple LGAs around Australia where units have outperformed houses for 10 years straight.
Yeah.
So the whole you're better off buying a house because it's got more capital growth. We can myth bust the shit out of
100%.
that. That isn't true.
Yeah.
It's based on the location.
Yeah.
And you could literally have two LGAs next to each other, and one of them performs really well, and the one next door doesn't. And even if we look at Newcastle as a whole as well, when I say location-based, Newcastle City Council, even within that, there's pockets that I wouldn't buy in,
100%,
and there's pockets I would.
Yeah.
Again, Merriweather Bar Beach, Cooks Hill, perfect spots for units, townhouses, Wickham,
but at
Newcastle
the same
West,
time, it's
maybe
like
not.
the saturation of that unit market. Wickham is one of them, where you've got a saturation and DY for people living in Sydney. But there's scarcity components to that as well. Like I owned a unit in Charlestown that I doubled my money on in 6 or 7 years, but it had scarcity because units in Charlestown, there's a shitload of them, but most of them are in, God knows how many stories they are, but like 20-story buildings. Some of them faces south. They have, 3 joint walls with their neighbours. The reason why my unit did well is because it had scarcity, even though it was a unit in that market. So it only had one joint wall. It had a courtyard. It had natural light from the 3 windows. It had an outlook into a park instead of looking at another building. People would want to live in something like that instead of some complex that you have noisy neighbours, high strata.
One just got released in King Street in Newcastle that had 300, I think it's 290 apartments in it.
So think about the scarcity in respect to that. Probably the only scarcity in that way is buying something on the northeastern side of the building.
Correct. Yeah.
That has natural sunlight all day, good ventilation.
Yeah. Good size windows.
Yeah, exactly.
Because there is then you start looking at the cheap developments versus the others, and I'm not going to name any of the developers. I don't want to upset anyone, but there is some developers in Newcastle that are very cheap and they're literally bolted together versus others that are more architecturally designed and the price is higher. Yeah. Those ones will hold their value a lot better than the bolted together buildings.
100%. And think about the buyer pool for Newcastle. There's a lot of able downsizer retirees who want that luxury, low maintenance living with water views. Yep. Where do they get it? With units.
And the easy way to think of it, or what I got taught a long time ago, was with houses you're buying the land, with a unit you're buying the location. Yeah. So that's the key. Yeah. You can't buy a unit in a shit location because you've sort of cancelled both out then. Yeah. So again, looking at some of the tips you just said, then looking at lower lower numbers in a development is always good. So that your boutique developments, if you want to call them that, and somewhere in that green leafy suburbs, where there isn't just miles and miles of housing units.
We said it before we started. Like, I would rather live in a 1-bedroom unit on the eastern side of Stewart Avenue. For anyone in Newcastle, they know what I'm talking about. Instead of going and living out in Cameron Park. Like, there's no way that I would live, say, probably a kilometre from the beach. Yep. I would rather downsize to a unit.
And some of I guess on an investor's point of view as well, the yields are usually stronger for a unit as well.
And that's the thing, that with that whole market changing, a lot of Sydney investors bought outside of Sydney because of yields, but the same thing's happening with that affordability and separation between houses and units, where people still want to invest, but even yields in Newcastle are compressing. Yep. So they've got to make up their yields in the unit market. And as long as you're getting the capital growth based on all of these fundamentals that we know about units, you can still achieve great results from units and have the yields to complement it.
Yeah, you can get both, 100%. So you will get eventually to a point in your portfolio where you do need to target these higher yielding properties. You can't always have the low yield, high capital growth properties because eventually you will run out of borrowing capacity.
And it's the same thing. It's probably another episode as well, but cities versus regional. You can't just say that cities are better than regional because regional still has outperforming numbers. But anyway, we'll continue.
So I guess some of the key criteria, do you want to run through some of those for if you were to pick a unit right now, just a bit of a checklist, what you would sort of be looking for before you purchased?
So in terms of, you can go into really deep research with, using the likes of hashtag analytics like I use with current demand to population, what the supply and demand dynamics are, which is stock on market, vacancy rates, days on markets, and all of those, factors that we look at, and then population forecasts. But it all comes back to scarcity. Yep. Scarcity is just applying all of those fundamentals in a way that you don't have to track all of that data.
Yep.
Like I just said with that unit, what's separating your unit or your house compared to the other properties in that market?
Has it got an ocean view? Has it got?
Yeah.
Is it along a lower level with a courtyard? You know, all those things you look at. You can't really put that into a spreadsheet, can you? You need to literally go out there and have a look. And if it's appealing to you, then it might be appealing to others.
Because, and I can say it on a local level now, most people love the Junction. The Junction's a highly desirable suburb in Newcastle, but there's very different properties within the Junction, and you might look at the metrics and say that vacancy rates are at 5%. Well, unit vacancy rates are about 1% because there's a shitload of people who rent units in the Junction. But houses sit vacant for slightly longer because the median price for the Junction is $2 million. So my neighbour at the moment's been trying to lease their property for $1,200 per week. It's sat on the market for like 8 weeks. It's a $2.5 million property. There's not many people in the market in Newcastle for $1,200 per week property.
Yeah.
Most of the people in that market already own their own home in Newcastle. So the tenancy, you've got to, if you're investing, it's combining not only the capital growth, but you've got to think about it from the rental perspective as well. Who's going to rent my property? Is it a uni student? Is it room sharers? Is it a professional couple? Most of the people who own homes aren't going to rent your property, which are typically families and downsizers. So, yes, you might get a less desirable tenant, but that's the nature of investing. The people who don't own property are the rental market.
So I would see next year, 2026, I would see that first home buyers are going to benefit most from targeting these property types.
Yep.
I see it all the time, and I had one recently where they were holding off, and I asked why, and they said they're struggling to find a property big enough with a backyard because they're planning on having kids. They don't have kids, but they're planning on having kids.
Yeah.
Now, I think what people have to remember is it's your first home, not your last. And as someone that has 3 kids, it is a long time. Even if you had a kid today, it's a long time before they're going to need a backyard. Yeah. There's plenty of time. You know, let's say you get pregnant, that's 9 months. They're not going to need a backyard for a couple of years. Yeah. Let's be real about it. Yeah. You know, you can go to parks and stuff like that. So it's a 3-year period that you've got to sell that house or sell that unit. But if you don't take action, you've just lost 3 years worth of capital growth.
And it's whether everyone, that's people applying their own logic to the broader market. I don't value a backyard because I like being outside. Yeah. So I would buy a unit because a unit would be just where I go to relax, eat, sleep. I don't need a backyard to let my kids run around. I'll go to the beach with the kids. I'll take them to the park. I'll be out constantly. Like, I'm very active and out. So just because you value a backyard doesn't mean that the market values a backyard. Yeah.
And then you got to start weighing up the location again. I know I've said that 20 times, but a backyard in Cameron Park versus a nice balcony with an ocean view in Merriweather, I know which one I'm picking. Seriously. But you need to really weigh up those options. So I think on a whole, first home buyers can't just say, no, I'm not buying a unit because they perform bad. We've proven that's not true. Yeah. There is multiple locations or LGAs that have units have outperformed houses for 10 years straight. Yeah. And so it's not a fluke. No. This happens. Yeah. And it's all based on affordability. Yeah. People can't afford to buy the $1.5 million house. They're going to buy the $800,000 unit in the same location. Yeah.
And we look at buyer demographics for the asset class that we're looking at when we're making decisions, especially for the investment side. Primary buyer demographic moving into the next couple of decades are able downsizers. A lot of them, from an affordability perspective, selling their home, want a unit, or it's their only thing that they can afford in the city that they want to stay in. But then your next buyer demographic is, well, we know that it's a diminishing cohort, but first home buyers, we know that affordability is a massive issue. Most first home buyers can't afford to buy a house. So the options are, especially if you live in the major cities, if you're living in Sydney, you either rent a unit or you own a unit if you're a first home buyer. So it's like, think about that from the moving forward over the next couple of decades. Who are the people buying the assets?
So the thing we'll go over now, some tips to avoid, I guess. Don't do these. Yeah, I think you've already mentioned this, but not all units are created equal. Yeah. I would avoid the big scale developments. So anything I don't know, what would you say, anything from maybe 20, 30?
Well, it comes back to
Starts
that
to get
land
big.
component as well. It's like if you're buying in the boutique blocks, your unit entitlement gives you that portion of land value if the building doesn't exist anymore. But at the same time, from those larger complexes, not only do you have less land that you own, you've got higher maintenance costs normally, or outgoings with body corporate, because you've typically got windows that need cleaning, and that's not just a quick ladder job where you just come and get some window cleaner. You've typically got people scaling the building. You've got scaffolding when work needs doing. You've got maintenance for elevators and all of these other things, and probably fire stairs and all of these other things that just increase cost to hold on to the property. So not only is there less scarcity in that fact, there's more maintenance. So I can't just say that broadly, because if you're in Sydney, like, there's still some outstanding units in massive developments.
Yeah.
But things to avoid are all of those non-scarcity components. Like, think about what property would you not want to live in?
Yeah.
And mainly when you're looking at a unit, it's units with like a
Boxed
single
in.
wall. If you've got 3 walls,
or when you've got the next unit blocks just across the road, and all you're looking at is them.
Yeah.
You know what I mean? I think if I'm going to be in a unit, I would like,
you want some sort of outlook.
I'm either having a courtyard or an outlook.
Yeah.
So these are the things you need to start weighing up.
Yeah.
And that unit that's looking at your neighbour is going to be worth less than the one on the other side that's going to be looking into the mountain or into the city.
Same as houses. It's like people appreciate an open plan, functional floor plan now, instead of, I know, like, a lot of the 60s, 70s and 80s builds, they had rooms. Like, your kitchen was just a kitchen, like it was a bedroom. People want a kitchen, dining, living all open now.
Yeah.
Like, all
Not
of
the little
these
boxy
things
they used to have.
100%. Like, if you walk into a house and you're like, oh, this feels nice to be in. It's the same with units. People want the same thing.
Yeah, open feel.
Yeah.
One thing that I will say on units, though, is if you are buying a unit, make sure you get the Strata reports and get someone that knows what they're looking at to look through it.
Yeah.
I've had recently, not recently, in the last 5 years, a client that had bought locally and didn't go through it properly, or the conveyancer didn't go through it properly, and there was concrete cancer in the outside of the building.
Yeah.
I think it cost him $60,000 within the first year of moving in.
And that's the thing,
So
you've got to read through the minutes, which are included, but it's typically
It'll
a 200-page document.
It'll give you an idea of what the expected capital outlay is over the next period. And something you actually need to read.
Yeah.
So
and that's the thing. The problem, the reason why units are thrown under the bus so much is because, one, the education piece. A lot of people don't understand body corporate reviewing strata reports. But it's also, if you go to a shit cafe, it's typically people, or if you go to a cafe and you've had a shit experience, you only review that cafe because you've had a shit experience. You don't walk away from a really good coffee at a place and go and give them a good review, typically. It's normally all the stuff that you see online is, I've had a bad experience and I want to tell someone about it.
Yeah.
And it's the same thing with units. People only get online and complain on forums like Reddit when they've had a bad experience. Yeah. People don't get on Newcastle subreddit and go, oh, I built my house in this unit, fucking XYZ.
That's probably a good point as well. I would buy a unit, but I wouldn't buy a unit off the plan.
Yeah.
That's a key as well.
Yeah.
I don't like
there's a lot more due diligence involved as well.
Yeah, I don't like the idea of buying or determining a value of something that hasn't been built.
Yeah.
Where's the comparatives?
Yeah.
Wait until it's been built for a year or so. You've seen some comparative sales. You're going to buy it at a right price.
I mean, people who have been in the market are educated who, if you're a business owner, you've dealt with contracts before, or you've built houses before, or you've bought and sold multiple properties, maybe you're more comfortable to do your own research and go through that process. Or you have a higher risk tolerance.
Yeah.
So you're willing to potentially buy something undervalued because you know that future market value will be X. And that's just a different risk profile with whoever's buying that asset.
Yeah.
But it does come with a lot more risk. So whether you want to take that on or not, that's up to the buyer.
So I think, in summary, units versus houses, I don't think units are a loser like they used to be. That's very...
I think what we've just spoke about alludes to the fact we prefer units.
Yeah, in certain ways.
I think we were just saying that units are still a great investment if you buy the right asset.
Correct.
I think houses will continue to outperform, generally speaking, but you can still outperform if you buy the right unit in the right location.
What I'm seeing as a trend, people are really taking more value in their location and their quality of life
100%.
As opposed to having land or a backyard they don't use.
100%.
It's as simple as that.
Yeah.
And that's my opinion.
Yeah.
And I think that we're going to see that continue where people are really enjoying being able to just walk out and go for a walk on the beach or do all these things. You know, you're really going to want to do that when you're in Windsor.
Yeah,
you know,
exactly.
You've got to really weigh up the land aspect of it versus quality of life and sort of weigh up what you think is going to be better for you.
I look at, say, Mossman and Manly, two markets that I'm very familiar with. There's some houses that will continue to do great, like ones that are on the water, you know, people with 20, 30, 40 million dollars. Those properties, those properties will continue to do well, and that's a housing market that will continue to accelerate. But for the $4, $5, $6, $7 million houses in Mossman, a lot of them are selling and being redeveloped for luxury units because they're the demographic who want to stay in Mossman because they want the green leafy city, they want their public little community that they all associate with. They want the commutability to the city and the lifestyle that Sydney has to offer.
They want to join the body corporate and whinge about the neighbours.
Exactly. That's their purpose moving forward.
Jim from Unit 301 hasn't put his bin out.
Yeah, but it's like developers are developing these units because they've done their experience. They've got experience in the market. They've done their research. They know who their buyers are. Yeah, they're developing for a reason. They know they'll turn a profit. So, you know, houses in all markets and units in all markets will do well if you apply the fundamentals across the board.
Yeah. Well, that's it for today. Houses versus units. It's a unit for me. I think if I was to pick between, as I said, living further out of town on a house or living in town and in a unit, I'd definitely choose the unit.
Everything for me comes back to lifestyle, whether that's a house or a unit.
Yeah, and people I see will put a lot of priority and a lot of value into their lifestyles going forward. Yeah, you know, we're all locked in our houses for quite a long period, and I think everyone is enjoying being in nice locations.
And we're continuing, but it's like we've said it multiple times, and Emily Wallace touched on it. It's like a cultural shift. Yeah, you see New York, you know, Tokyo, Paris, all of these advanced cities, they're all units there. Yeah. So you know, whether Australia we're heading in the same direction, we don't have that amount of population, but who knows? If the government continues to bring people in, we will. So,
all right. Well, that's it. We'll wrap up before we keep talking more.
See you on the next one.
Thank you.